So today we can have Frank Petry, the veteran of angel investing, as I like to call him, a person from Germany. So he can give us a little bit of experience from the German perspective of how investments are done. But I know personally Frank from his many adventures as a startup mentor and also a big stage speaker. So I think it's going to be an interesting experience for all of you to ask questions and learn practical case studies, I hope, about how he came to where he is now.
Yes. So can you see the screen?
Yes.
Okay. Myself, I started as a founder, a serial founder. I had several startups beginning in the 80s with the first ones. Later on, I turned myself angel investor and also got in contact with other investors, with VCs. Today, I'm still angel investing sometimes. And I'm also working with different VC companies on the board, supervisory board, advisory board, and soon again also actively as a fund manager, mainly in Europe. I'm not only working in Germany, also in the Netherlands, in UK, and in the Baltics. Also dealing with a lot of CE startups, trying to help them to get into the EU if they're promising, and therefore also running acceleration programs together with other investors. And yeah, one of my major focuses are the Baltics, all 3 Baltic countries. That's how I also met Christina. And that's why we're here today. And yeah, I also worked for a while in the US. Back in the 80s, I was in Silicon Valley. I still got some contacts there. And today we're also running some angel syndicates in the US, mainly AI startups. But that is really a total different topic to what we see and know in Europe. Americans are very different and much, much faster than we are. A syndicate and a deal in the US is done within 2 weeks, so which takes months over here in Europe. We will get back to that later. So let me try to go on here. I want to start with a little speech from a famous angel investor from the US. You can make your own luck in this life by putting yourself next to the people who are already winning. I really like that sentence. It explains a little bit, very short, what angel investing is. Find the right other ones that are successful and just be part of that success. So I wanted to put that up front to start. And I want to show you here the agenda, what I want to talk about. As I said in the beginning, we can skip some things, we can go a bit faster. Just give me some indication anywhere in between. If you have questions, just ask, or if you say, well, that's not interesting, that's too general, just give me feedback and we can go to the next one. I want to explain what is an angel, your profile, your angel profile, about startup investor network, startup evaluation, and a little bit, a little few into syndicates and VCs. And in the end, if we got some time left, and hopefully we got a lot, you can just ask me anything. So let's start with first thing, what is an angel? Angel investor, it's easy to say somebody is an angel investor, or many people are claiming to be angel investors. To me, that is not one thing. To me, the classical angel investor is a person that works together with a startup and that is investing money and time, his knowledge, his person into the startup. That is really the classical angel investor. There are many people that call themselves angel investors that are just investing the money. That to me is not really an angel. Those are high risk investors, persons that usually have a lot of money, that have different ways to put their money. Usually you already have all kind of other asset classes, and then you have some more money you want to put on a higher risk, but you don't really work with angels. So high net persons, that is to me not really an angel. And there are lots of people that use crowdfunding platforms and things like that to put 1,000, 2,000, maybe 5,000 euros and invest together with others in startups. But there again, it's only the money in a high risk asset class. And to me, that is not really angel investing. So what I'm talking about is people that invest money and their knowledge, their network, their experience into a startup to help them grow, to build something up, and yeah, to be the shadow of the founding team. So now let's talk about an angel profile. And that is something very important if you want to be a business angel, and if you want to work with startups, you need to know your own role before you start. And here I put some of the major bullet points in this slide. What you should know before you start investing in startups. So first thing, what is your tech stack? What do you know about technologies? Anybody can invest in whatever he wants to, but as long as you don't know about the technology, you can't really understand what the startup is doing. You don't know really the risk of your investment. Also, it's almost not possible to support your investment if you don't understand the technology. You don't have to be the expert within that technology, but you need enough knowledge to understand if it could work, if it not could work, how the market is, and what is actual state of the art. The next thing is the industries, the markets. You need to know what markets do you know. And this also includes like the regions. In some industries, it also depends in what region you're working, because there the markets are partly totally different. So if you want to invest in a startup in a certain industry, you need to know that industry, you need to understand it. And if you want to support them, if you want to use contacts, you need to talk the speech of that industry. Each industry has its own language. If you don't understand this, it's very hard to be successful. The third thing is network. What is your network? Have you ever thought about that? Which means what support with other people can you deliver to your startup? So maybe you worked before in big companies or anything alike, or as a consultant. So you know CFOs, CEOs, COOs of other companies, and those could be helpful to increase the growth of your startup. And you should be aware in what areas do you have that network, and is it a diversified network? So could you provide them people like lawyers, service people, or for the sales funnel of the startup, whatever. So you need to be aware, what is your network? We will later also come back to that point in another scope, which is very interesting. Another very, very important thing is the phase of the startup, like early seed, pre-seed, seed, which are the typical 3 angel investor phases. Everything that is later on is usually not classical angel investment scope. partly some angels go into growth, but usually very few. Most angel investments happen in the early phase, but still there. You should listen to some pitches, you should go to some events and get a feeling which startups are really your personal world. So is it those very early starting with ideation that are not yet with an MVP? Can you help them to get those first steps to create an MVP, to test their first product or service? Or is it more your thing, if they already have an MVP, to show them how to grow in the market, how to get first MRR, not just project revenue? Or is it more your type of business, if there is already a small business, so they have already maybe 2 or 3 customers, so in general the MVP is working, and you help them to build really a business out of this. So yeah, this should also be clear. Next thing, and this also depends on your personal favorites, is you can invest in syndicates. So you always do it together with others, which means you don't have to do everything on your own. You just play a special role within a group. Also with crowds, which is less formal than syndicates. In a crowd, several people invest together without forming a legal entity. Or are you more the lonely warrior? So an personal angel that wants to work with his startup and does not want to interfere with other investors or with groups. Yeah, and last thing is about the knowledge and the money. So that's what I said before. To me, the classical investor is investing his knowledge and his money. And you need to be clear, what is the experience you can deliver, you want to deliver? And on the other hand, what is your ticket size? What is the amount you want to invest? And you need a strategy for this before you invest the first time. And this interferes also with the stage you're investing. I know many angels that invest very early, the first time, and then they go on 2 or 3 rounds together with that startup. So it's not just a one-time investment, one sum, but here it's accumulating. And you need to know before how much you want to dedicate to a startup. Especially if you don't want to invest just in one. If you diversify and you maybe have a pool of startups with 5 or some even 10, you need to know what could be the follow-ups. You really need a kind of a business plan to know what money does it take over the next years if you want to do this, that you're in the end able to do this. So related to this is the Startup Investor Network. There should be, yeah, there is. There I copied a little slide which shows stages of a startup. You can see the development of the revenue, and typical angels are in that red space at the beginning, friends and family and angels. The most dangerous part of investing, because many startups die in those early phases, and it usually goes shortly after break even. So what do I mean with the network? To find the right startup to work with, you need a deal flow, a startup funnel. So you need a network to find those startups, the right startups. You can go to some events, but you will need some relation either to other investors, to accelerators, or different kind of organizations where you can find lots of startups, because you will see maybe 100 to find one that is the one you want to work with. And therefore, you need to build up, or maybe you already have it, that network to find the right startups. That is the one side. On the other side, and that's something many angels, especially the new ones, often forget. There's the other end of the funnel. If you invested in a startup, you want to leave it after some years. And of course, you want to make some money. And there are not that many angel investors that go all the way here to the end, to an IPO or a big deal. So the question is, what is your sales funnel? When can you leave a startup? Do you have a network? Do you have sources to sell it, to support the startup? It's always a very bad way if you're totally passive in that way, if you just depend on the startup, whatever they are doing. Especially if you get in early. You need an exit strategy, and you should have a funnel to sell startups. The second point I put here is, and this has a lot to do also with network, maybe you can do a sales extension, which means you don't sell just shortly after break even, but you go into the growth phase. If you go into growth phase, you need to be aware that others investors are coming in, either bigger investors or first VC investors. And if they come in, you usually have a dilution of the part of the startup you're owning, or you have to put in a lot of extra money to keep your percentage of the startup. The more risky thing is if a new investor, especially if VC investors step in, they have term sheets with a lot of legal clauses. And always the newer investor, if he can get in, has clauses that are a risk for you as one of the early investors. And you're usually not able to block this, because if you try to put too many clauses in your term sheet at the beginning, the startup will not be able to get the later investors, because they will check the terms from the first investors. And if they're too complicated, or if they block things, they won't invest. So you need to find the right balance between protecting yourself with some clauses, but on the other hand, not putting too many clauses into the term sheets you're using, to leave an open way for the following investors. And if you want to stay in growth phase with your startup to aim maybe at an M&A or an IPO later on, you should have some contacts to those later stage investors. If you trust them, and if they co-invest in startups you bring to them, you're on a safer way, and you can go more stages than usually an angel investor does. So I always say, know your stage you're investing in, and know the exit from this stage. Otherwise, it could get very dangerous. I've seen many angels with good startups that in the end, partly still won some money, but much less than they could have, because the legal clauses from the later investors cut off a lot of this cake. So let me quickly jump a little bit into startup evaluation. That alone is, yeah, a week of itself for webinar. Yeah, challenging times ahead. We just saw it last week. I just put here NASDAQ on and Meta, Facebook as one of the technology stacks, which sharply came down. At the moment, I see many investors discussing like, well, does the stock market interfere with the angel or the VC market? Or are these two markets? So if the stock market is going down, will like what we see at the moment in the investment space, that valuations are rising, there more money is getting into startups, especially tech startups. So will that be a solemn development? Is it independent from the stock markets? And I really don't understand why people are discussing that. Of course, it's not. And that is quite easy to explain. The whole history of each company, I mean, like Facebook, it's been a startup several years ago. And if you go through the stages and always the later investors are coming in, each investor is only coming in if he sees the chance to make money with his investment. So you can look from really the start until the company is at the stock market. And an investor in between will only step in if he sees the chance to gain something in between. And if the stock market valuations, which are the end of this game, are coming down, the space in between for the other investors is also tightening. So if somebody in this race is too high with his valuations, he will not find the buyer for his startup. So even as an angel investors, we have to keep an eye on what is the development on the stock market, on the M&A market, for those industries, for those technologies we're investing in. Here I put some numbers to have a feeling, as long as you maybe don't know. What are typical rounds valuations? What do you typically get on equity? And what is the runway for the startup in different rounds? So I put here, again, the three classical angel rounds, which is the early angel round. So usually before MVP, pre-seed, where you usually have MVP, some project revenue, or maybe one first customer, and then seed, where you have your first market traction with the first small customers and some MRR. I put two numbers here. The US is the standard, so we see what's happening there, and we see there's a huge difference to the European market. And even those numbers for the European market are quite high, because this is including still the UK. And in the UK, it's usually higher than in Western Europe. And I know in the Baltics and CE region, these numbers, again, are a little bit lower. So there we see the differences between the rounds, approximately, the valuations. And in the end, with equity, there's no difference between US and Europe. It's always about 10 to 20% in each round in the middle. And the runways are typically the same. The first runway, 9 to 12, pre-seed also 9 to 12, and seed is more, should be at least 1 year. That's also very important. I'd never go with the startup that is not planning at least 1 year with milestones. And if they're not able to raise the money they need for the next milestone or for the next year, the major milestone, they don't have a good financial planning. Raising money takes a lot of time for startups, so they need a substantial good plan to do this. And this should always be enough money that they can, in between the rounds, focus on their business and not put too many resources on finding new investments. It's very essential to have a look at this. The valuations, especially in the beginning, they are important, but not that important. In the end, if you agree with a startup on a valuation of like 2.5 million or 3 million, that's not a huge difference for your investment. There is so much to gain afterwards. If they're good, you will make very good money, even if you have less valuation, if you have a higher valuation at the beginning than you think. And with valuation methods, it's always good if you know how to use different ones. But a valuation only helps you to see if that what you're negotiating about fits somewhere within a range. You never can say the valuation of a startup is exactly something. In the end, it's a market. It's like the stock market. You can never say exactly what is the value of Facebook. The value you see on the stock market is how much are some people willing to pay, and on the other side, for how much money are other people willing to sell. And then there's a market and you will find yourself somewhere in the middle. So valuation only helps you to know what is your base and to find a range. And if you do 10 different valuation models on a startup, you will have 10 different valuations. So that's very important, especially for new angel investors. This is something I get very often addressed from the newcomers, like, what is the best valuation method and to find the exact valuation of a startup? Something like this does not exist. It's only helpful tools. Oh yeah, one other, and this is also a bit more for the newcomers about startup evaluation. You often hear the terms pre and post money. Here I put the numbers for the same investment, which is 250,000 euros. One time it's pre-money valuation and the other time it's post-money valuation. And you see in the end, it's a huge difference. As an investor, if it's pre-money, you get 20%. And the valuation of the startup is 1,250,000 in the end. If you talk about post-money valuation, the investor will get 25%. And the valuation of the startup altogether is just 1 million. So it's exactly the same investment, but the one is pre and the other is post money, which means before the money is put in the startup and after the money is put in the startup. Yeah, I think this one helps if you forget what pre or post money is, to have a look at, to understand what is the difference. And this is especially for newer angels, very important to know that there are these two terms and what is the difference. And it's very important if you start negotiating that you clearly talk about pre or post money, that everybody on the table has the same meaning. Okay, yeah, syndicates and VCs. As I said before a little bit, this is for angels one part that could be interesting if you don't want to be the lonely investor, and if you don't want to work one-on-one with your startup and to build it. If you want to dedicate a little bit less time or just in a certain scope, you can do it together with others. Which means you can build a syndicate together with other angels, and usually lots of investment clubs or business angel clubs like yours here are doing this together. And this is also very interesting for the newcomers. So you can invest together with experienced angels, and you usually in a syndicate, one takes the lead. So he organizes the syndicate, which is a legal entity, and all angels put their money together into that syndicate and invest as one syndicate in the startup. This lowers in the end all the efforts administration, and it helps the startup because every startup has a cap table where all the investors are listed. And it's important for the startups that they don't have too many investors in their cap table. At the beginning, if you're just with some angel and small investors, it's not that big matter. But later on, if a startup is successful and it's growing, it usually leads to that many people want to get on advisory board, on a board, want to take board decisions, or even on a supervisory board. Also, it's a problem if you have your annual meeting, the shareholders meeting, because everybody who has invested in the startup needs to be invited to this meeting, and he has the right to talk there, to ask anything, to see all kinds of documents and papers. And if you have maybe, let's say, 50 people on your list, this means a long and a big meeting. And maybe you also are not that easy finding a consent where to go with the startup. So professional investors like VCs don't like too many small investors or angels to be in the startups list and the cap table. And the syndicates helps with that, because then many people are putting the money together, and only the leader of the syndicate is the one that goes to the annual meeting. And he is the one who talks there, and he is the one who helps to direct the startup. So the startup and the other investors only have to deal with one person. And that is also a very important point why to build syndicates for something like this. And that's a big difference to crowdfunding, where also each person usually itself is part of the list. Yeah, and syndicates, you always need legal persons because you can do them everywhere. As I said before, we are doing syndicates in the US, we're doing syndicates in the UK, also in Germany and Switzerland. And in all 4 countries, it's totally different. The laws, the administration is in each country different to the other. And that's the same in the Baltics. So even if you go just across the border of your small countries, if you go to Lithuania or to Estonia, it's different to Latvia. So it's important to have a legal person within the build-up of a syndicate to match the legal parts there. Yeah, and if you want to invest abroad as an angel, which not happens too often. Most angels invest in their region, in their country. Then it's also good to join a syndicate because it's very hard to know the laws, the legal setup in the other countries. Was there somebody who wanted to ask something? It just had a sound in my ear. No? Okay. Yeah, another way which is opening up more and more are VCs. We have much more early stage VCs today that are investing in pre-seed and seed. And many of them are opening up for co-investments of business angels. So this could be also a vehicle if you don't want to invest on your own, and if you want to have help with your deal flow, to work together with one of the early stage VCs and yeah, to get the chance to do co-investments. The only thing is usually this starts with about 50K, not below, which is understandable because this also is administration for the VCs and they're interested to have more money for their startups, which makes it easier for the startups to grow. But on the other hand, they also don't want to have too many people joining as the administration effort is getting higher and higher. So yeah, we're already at Ask Frank. So as you didn't ask in between, you can ask me now, whatever you want. Just stop the screen sharing, it's easier.
So I see Voldemars and Tomas has raised the hands, but I didn't see who was first, and Carlos also.
Okay.
Maybe Voldemars.
Thank you, Frank, and thank you, Christy. I have actually several questions. I'll go with the first one. You in the beginning, you mentioned that you are especially focusing on Baltic states. What do you mean by that? And
okay, I start with that one. Yeah, I often visited the Baltic states, especially Latvia. I met lots of interesting startups there. I was also for more than 3 years partner of Baltic Sandbox, which is in Lithuania. And I've been working, so I know the founders of Startup Wise Guys. So I'm also sharing experience with them and investments. This got me closer to the Baltics. I also usually go to Digital Freedom Festival, Tech Chill, and some more festivals where I know many of the founders. Also, I know lots of politicians in all 3 countries. And you have quite a good startup policy in general, which makes it easy for founders in your countries, which makes it also easy for other Eastern European non-EU founders to come to the EU through the Baltics. So that is another reason. And in the end, also it's interesting from the financial point. That's why we just started a new venture in Estonia, which is tax-wise for us the most interesting of the 3, at least at the moment. And we will have very soon Thundermountain ventures in Tallinn.
Thank you. Another question is seem to be very, very good advice about building exit network. Can you tell us a little bit more how would you advise to build an exit network and deploy that?
Okay.
Thank you.
That is not that easy. It depends a little bit on your personal investment scope. So what is the area you want to invest in? What is your industry, your technology? Because if you know that, you know what you need for your network. If it's a local network, if you say, I only invest like in Latvia, you need to build your local Latvian network. If you say you invest in the Baltic states, you also need to extend the network to the other countries, and you need to know persons there. So this depends a little bit first on your personal investment scope, what you really need. The best way to get into that network is to go to events, because there you meet all those people, or most of them. A good way is to start with the bigger events. There you get the first contacts, and there you get then the information, what is happening more locally from those first contacts. And then you can get or dive deeper into those areas that are of interest for you. So like if I take Baltics and Nordics, I first started with Slush in Helsinki, because all Nordic countries, including the Baltics, are there at this big festival, and also Tactile, which is famous outside the Baltics. And if you go there, then you get to know, like, I didn't know before about Digital Freedom Festival. So from Tactile, I got to Digital Freedom Festival, which is much more local for Latvia or for Riga. And from the combination of those two, I have most contacts, like to the politics, to the financial system in Riga, to lawyers, to startups, to the agencies, and so on, and even to Latban, and same with Litban and the others.
Yes, but Frank, my question was about building exit network.
Not the sorry, yeah, didn't get the exit network. Yeah, okay. There, same thing. You need to know your scope, your industry, and then you have to think, what are these markets your startup is working in? What could be the possible buyer for your startup? Is it persons from a certain industry? Are these certain VCs or other investors? And then you need to look, where are those? Where do I find them? What are the events they go to? You can either also find them on the big events, like again, Slush, the Next Web, Web Summit, things like that. There are also pure investor events, so without startups, where just investors meet and talk about the future of certain industries or certain technologies. And also this is narrowed by stages. So there are events for the early stage investors, VCs and angels, and for the later stage, more growth stage investors and VCs. So you need to go to these events and to start to build this network. And yeah, at the beginning, it's the same relation between startup and angel investor. You need to build up trust. You need to know the other person. That's the first step. And then after a while, when you started working with them, they know your quality. So some VCs really love to work with several angel investors, because they know if they come with a deal, it's a good deal. They know these angels have a good quality. They know to pick the right startups at a stage where usually the VCs are not looking, or they can't look all the way down to the beginning. So they try to find those angels, those people that can identify in a very, very early stage those interesting startups, and that can build them to the stage that they're interesting for the VC. And if you get a part of this, I always say it's a feeding line. It's always the next bigger fish. You need to find your place within that feeding line. And once you proved that you have a good track record in this, it's quite easy. Otherwise, it's really hard. If you invest in all kind of different startups, from medtech to AI to even the hardware, it gets hard for you to support the founders later on, because nobody can have contacts in all these areas. And you need contacts to build that. And even your startup needs a strategy. If they want to be bought by somebody, they need a strategy to build their startup that it fits the criteria for this buyer. It's like optimizing a product. The whole company is the product in the end. And you need to know how these food chains work.
So it's like agenda in an agenda. Startup has an
Yes,
agenda to sell, but the investor has an agenda how to sell.
Needs to have. It's like with everything else. If you want to buy things, not to keep them. If you want to create value, if you want to get out something out of a deal, you buy it and you have to sell it, and you have to sell it for a higher price than you bought it. And then you need to know your market, where to sell it. If you don't know that market, it's hard. If you buy things cheap and don't know where to sell them, it's just going to pile up somewhere in your portfolio, and you only by luck get rid of the startups.
Well, it's nice what you're saying. I also want to point out that Latban is actually working with trying to build relationships with a lot of VCs out there in Europe, because of this case, that I see an opportunity that we can invest together as a syndicate, VC taking the biggest share, or as you pointed out now, it actually could be their exit strategy once they feel that maybe they don't have time anymore to work with this startup, or the startup is ready to be sold, and these are the people, the VC funds, actually they can go to and offer that the startup is ready and you can take it over. It's a good note.
Yep.
I see that Thomas also wants to ask a question.
Thank you. First of all, thank you for a very interesting talk. I enjoyed your presentation. I would sign my name to everything you said.
Thank you.
It's my pleasure. At the beginning of your talk, you said something that you said you would return to later, but you didn't, because I didn't. You said that in the US, deals happen much more quickly than in Europe.
Yeah.
As an angel who likes to be involved and kind of help companies and understand the business model, that fast moving, I've struggled to, I stay away from deals that happen too quickly. So I'm interested to hear your perspective on that. Also, respect of, do you have any advice for angel groups and angel networks in terms of how the group can help the angels, one, plan for the exits? Like you have like a policy, that there should be always the lead who encourages the creation of an exit committee or something like that, and helping startups maybe with the human resources and opportunities. How, what could the group do? So those are my questions. Thank you.
Okay, I will start with the US. You're right. I wanted to tell that again with the syndicates, because we're actually doing syndicates in California, in the Valley, and especially my partner from Switzerland is doing that. He stays up the nights. The huge difference there is the US investors are much more number driven. They work a lot with KPIs. They're not looking that much on the teams, on the surroundings of a startup. That's what we do care much more here in Europe. In the US, they check the KPIs. If they look promising, they invest. And this is much more about statistics and mathematics. So they try to diversify, to invest in 10 startups, and they don't care if 9 of these startups go bankrupt, as long as they have the one unicorn within that, which pays off the 9 and makes the big win. And in the US, it's really that fast. If you're not able to create your syndicate within 1 week and get your co-investors on board within the second week, and in the end of the second week, finalize legally your deal, you're out because another syndicate is faster. That is really that speed, which also means you have to do your due diligence and everything within that short period. If you do it with that numbers game, it's possible to do that just with spreadsheets, with prepared software solutions. Also, it works there because the investors in the US, they decide that fast and they commit that fast. You usually don't find that in Europe, that somebody really says within 1 week, yes, I will do that deal or not. So in the US, they're really deciding that fast and they're putting the money on the table also that fast. So that is the huge difference to what we do over here. I personally don't like it. I'm a bit used to it. As I said before, I lived in California for a while. So I know this culture and I know the way of doing business in the US. I prefer doing business in Europe, a bit slower, a bit more substantial, sustainable. And I think in the end, the chances are as good as in the US. Maybe short term, you could have the bigger win, but to me, the US is more like a bit gambling and betting, while in Europe, it's really more investment. So that is the major difference. Yeah, but yeah, and what I wanted to say, you should definitely have a lot of experience before you try to do syndicates in the US. I would definitely first do that here in Europe.
Sorry, so do you think that that's because the Americans are so much more experienced in this game and they're capable of making faster decisions? Or do you think it's that in the beginning of the Silicon Valley, they were just as considerate and slow as we are, and that they reached a bubble and now they're backing the masses of this world?
Yeah, it's two things. I mean, it's the culture in general. It's not only a startup area, it's also other businesses. Americans are faster with decisions. They don't care that much. They bet faster on markets, and they're faster all in. And they say either I lose or I win. And if I lose, I'll start again. That's classical US mindset. Over here, if you gain something, you try to preserve that and to build upon that and to grow it. So that is the major difference in general. Early Silicon Valley, I experienced that. That was a bit what we have today in Europe. Yes, it's a huge difference to what we have today. Back then, people really wanted to create something new. They had new ideas. They wanted to change the world. That was the general idea, not to make money. Today, they want to make money. If they change the world, it's nice, but the first thing is they want to make money. So it's really a Shark Tank. It's less regulated. That's also a reason why it is faster. If you want to do a legal setup over here for a syndicate or a VC or anything else in this area, you have a lot of restrictions. Even in the Baltics, you have much less than I have here in Germany. It's impossible, like, to build a VC fund in Germany faster than half a year. It's not possible. You need to do so much paper and administrative work in advance. Yeah, in the US, it's finding some things, and the SEC will respond within a few days. So you can build a venture fund in the US within a month, a whole venture fund. That is in Europe not possible. So it's a mixture between the culture, between legislation, yeah, and also the masses, and then the model, because only a mathematical driven model with KPIs is easier to run. You can automate this. And if you run on that only with statistical numbers, and if it's mainly about the money you want to earn, it works. But most of the angel investors I know from Europe are not only investing money into startups because they want to make a lot of money. Most angel investors want to work with the startups, so they want to build something. There are many that want to have impact, so they want to do something good with the startup they invest in, either for nature, society, all kind of things. And this is a totally different framework to the US. So you can't really compare that. And now I lost the second part of your question.
But the question was, what advice can you give to the group, the angel network?
Oh yeah, the group. Yeah. Okay. Yeah. That is that typical thing where I said before, you need to be clear what is that role you want to play within angel investing. Is it that one-on-one working with a startup, building something personally together with others? Or is it maybe to have more startups to work with? And if you have a certain part where you're an expert, either you've been working at a bank before, so you're good in financials, in banking. Another angel has been working in a certain industry, maybe chemistry or something. So he knows about these markets and industry. Each one on himself could only put that part of expertise to the startup he has. But if you join forces, you could help a startup with financials and knowledge of chemistry markets. And this applies to much more things. And this is something that's a strength. If you have something like Latban as a network, you have all different skill sets as you're here. And if you bring these skill sets together, this enables you as a group to invest in much more diversified startups than as any single person can do alone, because everybody can add that part that is needed. And there are some startups that will never need any help with financials because they have a founder that is really good. And the next one don't need help with marketing or sales. But maybe with some kind of internal organization, logistic or whatever. And this will differ from startup to startup. And if you have a different skill set and different startups with different needs, you will create much more fits together. So that is the one thing. On the other hand, that's what Christine said before. You also can combine your networks, which helps to find more deal flow, which also helps, on the other hand, to find more opportunities to do an M&A deal or something else to help to exit. So as a group together, you can create much more opportunities. The important thing is that each one of you is aware what is his style of investing. And if there are enough people that say, well, I would like to do that in a group because there are many opportunities, I can even learn something. Because if you have a startup and many angels put their different skills together, the other participating angels are also learning something extra. They're gaining skills. Yeah, then it makes totally perfectly sense not only to build Latban to meet once or twice a month, but really to do something together and to build a kind of, I would say it's close to an acceleration program, yeah, which is not that formal like an accelerator where you do ABC, but it's about the same. You put the missing skills to a startup, and if you're a group, you can do that. And you can at the beginning check where the founder is good, what do they miss, and then you can put the missing parts to the startup founders. Yeah, and you know who in your group is maybe the good one at helping with marketing and sales, who is the good one helping with finance, or who is the good one helping with logistics. If you know this, it's a perfect fit, and it creates more value than you ever can create alone. And to me, I do mixture because I always like to work with a startup one-on-one. I always have one or two that I'm still doing angel investments, and all the rest I'm doing through syndicates or even VCs. And they always call me if there's a special need where they know, okay, Frank would be now the best to help the startup to get along with this problem or to increase something. And if not, I know that somebody else will care about that, who is the expert. So yeah, both make sense. Both are opportunities, and I say it's always great if angel club like yours creates something where there is that opportunity of working together and to create that value together.
Thank you.
I'm quietly writing down things in the background. And Carlos, you had a question.
Yeah, I have two questions if we will have the time. First of all, Frank, thank you. It's very interesting. But your life experience in investing as an angel in Europe, how much did you have to apply the power law? Meaning that you have to get a 10 times to 30 times return to make up for your all your total investments. And how much can we look at as just looking for good companies to make reasonable investments? How much is it? It's follow up to what you talked about the US experience. How much is it a gamble versus an investment?
Good to say. To me, it's an investment. I prefer even partly the slower way to grow. I even sometimes accelerate down the speed of some of my startups to have them stable with lower risk than growing too fast, and then help them later on to go up. Therefore, I also prefer the European style of investing. I do a very intense due diligence on the startups. I also use KPIs, but that is not the major thing to me. So I would never go the American style, setting up a KPI frame and just check mark and say, okay, it fits within the frame, invest in this one. For me, the first criteria I look at, and this is a 0-1 decision, is the founders team. Only if the founders are strong entrepreneurs, if I like the founders, if that is a team I can work with, I will invest. Even if all KPIs are good, if the market looks good, if I don't like the startup team, I'm not going to invest as an angel. I maybe hand them over to one of the VCs I'm related with, so that team can have a look, but that is not the scope for my angel investment. And for the US, in the early phases, I invested in the US myself. I don't do this anymore. I'm setting up the syndicates. I help to grow the teams. So I'm mentoring, I'm doing business there, but I'm not part of the syndicates anymore. Because that is just, it's not the business. It's not my business. To me, that business is, yes, earning money, but on the other hand, it's also fun. I spend a lot of my private time into this space because there's not much difference between my leisure time and my business time. I just like what I do. So it's like, it's my hobby and earning money with that. So I think this explains the mindset how I do this. And this helps you also to get deep into that.
So my second question is, thank you on the first. So I have zero experience on syndicates, setting them up, etc. What is the upside for the person or persons who are organizing the syndicate? What additional benefits do they get as opposed to people just joining in as participants?
Okay. Usually the only thing they get for doing this is that they get a certain percentage of the carry. It's about usually in the average 15 to 20%. All kind of other costs, if usually there are fees around 5% in average. They don't earn any money with that. All that money usually goes into the setup, the legal fees, state governmental fees, setting up the company. You need some legal people involved usually. So that is about 5% of the investments. And the rest is just the carry you get for organizing that, for doing the due diligence, for organizing the deal flow and everything else.
And is there typically a hurdle rate for the carry to step in?
Some do, but usually not with the syndicates. It's more in the VC world.
Okay. Okay. Well, it's not bad to get a 15-20% carry. It's worth one's while.
It's not bad, but also it's a lot of work. Don't underestimate that.
What isn't?
Yeah, what isn't, but yeah. And if you do co-investments within a VC, or if you join a VC fund, then you usually have a hurdle rate, which is at the moment, I think 5 to 6%.
Well, Latvan is actually introducing a new thing this year, that we would be able to take out the administrative burden and take a fee from the investment done and take it upon us as the organization to fix all the legal stuff, everything that you need, so the investor can, focus on the things that are more easy for them. So it's basically you pay for your time and you can focus on things that you really care about.
That is exactly
not the lawyer stuff.
But that's exactly the thing, which is why you have syndicates. It makes it easier to invest for people, unless you don't want this one-on-one working situation with a startup. If you want to, if you invest, it's always smart to diversify, not to bet everything on one. So if you have the chance to diversify, it's much easier. For one person, that is just a lot of effort. And then if you have a vehicle like a syndicate, it's much easier to diversify. You're not investing maybe in 1 or 2 startups you really work intensely with. You can invest in like 10 or 15 startups as a group. And that is quite easy. And also, if you count the administrative costs, if you put that all together, it's less than you would do that individually. So yeah, this is why you have syndicates, and it makes totally sense if you already have an angel club to organize a platform or something like that, and if you can take away the legal stuff. I mean, who as investor wants to deal with the legal and administrative stuff? You just do it because you have to do it. So if the club can do that, it's really easy. And I mean, the most part of those fees you would have to pay either if you do it on your own. And then if on the other side, the club, or if it's a lead angel, gets something for organizing this, for due diligence and all the things you provide, that's just fair. I mean, if you go to VC, if you buy a fund or ETF on the stock market, it's the same. You also pay a fee for them organizing all that for you. So there's no big difference.
Okay, I have some questions, but do other investors have some questions to ask? Okay, because people are silent, I'm gonna just use the opportunity to ask questions. Well, I wanted to have a feeling, because you have like a better perspective, I would say, about the situation which is going on, because your network is very huge. I mean, because you can see it from all perspectives, basically, and because you're continuously in this stream of contacts with multiple VC funds where you are a board member, and that because you've been invited many times and you are continuously in contact with a lot of accelerators and event organizers. So could you tell us what are what is the general notion, what are the trends that you see, that because of the last 2 years of pandemics, it just also brings to investors a lot of doubts on, how can I invest as much as I was doing before, because the fragile and unstable economical situation, it just like gives you opportunities, but at the same time, it becomes more harder to predict where should I go, So maybe there are some things that you have, noticed and came to conclusions that maybe, I don't know, SaaS will boom by 30%, or that AI is overrated, or, things like this. So I don't know, pay attention more.
Okay. That is not easy, because at the moment, starting from last week, we see some interesting developments in general in economics, not only for the startup market. US started to raise interest rates, and Europe is to follow. In March, I predict Germany will raise interest rates, which will be for continental Europe a huge sign. And this has influence on many markets and areas. The question is, how fast and how far will that go? That is still hard to say, because this break came very fast now. Within the pandemic, let me start with this one. We've seen two differing streams. First, the amount of investments was really going up. Many people thought it would drop down, but exactly the opposite happened. Many people saw the opportunity that we come, especially in Europe, to more digitization. So into these areas, and also AI is profiting a lot from this. We see a lot more money coming in. But this money goes to the later stage startups, where we've seen the opposite is in early stage. And this will affect us in the future, because there will be in some areas a lack of startups. There were many startups that died in the pandemic, or are at the moment going down, because they're not able to survive. So the trend in early stage was going down, and this has a reason. Many of the angel investors that are supporting early stage are still themselves entrepreneurs, usually successful entrepreneurs of SME companies. And usually they invest a part of their money in their own company, and then they have some money left that they invest in startups. But with the pandemic, many of these people took the money they usually invest in startups for their own companies because they were in trouble because of the pandemic. So there, partly, this market tried out. It was a bit a reaction of the VCs that some of them got more into early stage market. In the US, a lot, and there they have a problem already. In Europe, less. There the startups have the problem. In the US, the problem is as many of the VCs went into that market, and VCs are not looking at the valuations that sharp, because in later stages, it's not that interesting if the valuation is 10, 15% up or down. If you go into early stages, this has a real impact. We've just seen, what was it, 2 weeks ago, Y Combinator, Techstars, and others raised the money for their accelerators. So all startups that can be part of their accelerator got 125K for Y Combinator, and what was it? I think 100K was it at Techstars. And now, if a startup applies and gets into the program, it gets 500K. 500K for early stage startup, which means they're all aiming at this. And on the other side, they say, look, prices are just quadrupled. And if an angel now asks to get a ticket in an early stage startup in the US, the startup founders come like, yeah, look at Y Combinator, I get 500K, so I won't take 100K from you as angel investor. If you want to come on our cap table, you need to start with 250 or 300K. And this drops out even a lot of investors in the US. Also, the numbers there are higher. But that's really getting a problem there. I know many angels there, and for them, it really gets a problem that the market is going, yeah, far too high. It's crazy. That's a bubble they're creating there. I'm quite sure. And on the other hand, opposite side over here in Europe, we had large rounds in growth series for bigger startup companies. We had many VCs and also angel investors supporting their portfolio startups. I did the same. I took a lot of money I wanted to spend on new startups to the side, and I gave it to my portfolio startups to get them through the pandemic. That's, on the other hand, the opportunity, because if you have startups that are good, this pandemic, when it comes down, will give them the chance to lift much faster, because there will be a much bigger demand. And if they're strong enough and if they're ready for the market, they will grow much faster. And that's also the chance for startups that are now starting at the moment. If they're strong enough to found a startup in this environment, and if the business case is a good one, they have a very good chance to be one of the strongest coming out of the pandemic. But at the moment, it's hard to find them, as on the one hand, we have the chance, like this Zoom meeting here, meeting without borders. On the other hand, the events are missing. Usually, I've been traveling through whole Europe within 1 year, meeting lots of people. And the thing is, within one event, you meet hundreds of people, investors and startups. And even if you only talk to them 5 minutes, you recognize who is worth to do a follow-up. And that's not possible with something like these Zoom meetings. I mean, I'm meeting you all now, and I get some questions, so I will remember maybe some persons even later, and maybe we catch up if I'm next time in Riga. But with many, I didn't speak, so I just saw you, and I don't know what you're interested in or what you've seen. If we were now in Riga and did this in a room, there was maybe a coffee break or something like that, or even after the event, we would go to a wine bar or whatever and talk about some things. And there you learn, there you see the opportunities, and then you follow up. And this is how new things happen. And that is missing at the moment. That is desperately missing. And that is very, very hard for the startups. Because many startups you just don't see, you don't find them. So yeah, this has a huge influence.
Okay. Well, I totally agree. This is what is in my agenda that I'm lobbying all the time. Events, networking.
Yeah, that's it. I mean,
partnerships.
we've met last time what was it? November in Riga.
Yeah.
So we sat together for coffee and talked about different topics, and that's how the idea for this was born. It only happens like this. That's exactly it.
Yeah. Well, you know, we are trying to make our meetings also more interactive. Sometimes it's, you know, for us as an organization to understand what to do. Like, honestly, I have a struggle to gaining more members. And I am having a struggle to gaining those good startups. And
Yeah,
it's just
that-
exhausting to go to all of those, you know, contacts that I'm building and trying to get started from them, because also they have a struggle. Also, those accelerators have a problem. They ask me, can I help them?
They all have that. That's exactly it. And yeah, I can believe with new members it's the same. If the one thing is taking part in something like this, maybe you can like hear, okay, that's interesting, but it's a huge difference like standing together and maybe even after the event having a beer and talking like about some things. That's usually how it happens that you gain the new members. And yeah, it's definitely still missing, hopefully.
Can I add up a little bit?
Sure.
So this is the good way to also promote events like now that we are talking with you. So you have a lot of experience in angel investing, and also startups see the opportunity to talk with you maybe, and then from Baltic states and then later on. So that's the good thing. And also I totally agree with Christine. The new members should be educated about angel investing as well. And also this is like a good thing to do, because they can listen to you and get some knowledge.
That is very important, especially if you start, that you get the experience from other angels, that you can quickly learn and get at a stage that the investment makes sense. Otherwise, it's with all other things. If you start something at the beginning, you make a lot of mistakes.
Yeah, sure.
And the more you can avoid, the better it is, especially if you put money into that game.
I especially like this article, not article, but statement about great angel investors. So you should follow some example that has been done before.
Yes. Makes a lot of sense. Use the experience, maybe add something new, add something personal, but you shouldn't invent something again which is already there.
Yes.
So, yeah.
And when will be next time you will be in Riga?
In Riga, I don't know yet. It's still hard to plan. I'll be in, what is it? In 3 weeks, I'll be in Vilnius at least. There we'll do some lectures about investing, VC and angel investing for the Baltic Management Institute in Vilnius. They're having a longer course about this. So I'll go there, and then it depends on how is it the pandemic and all that around, how are travel restrictions or not. Maybe I take the chance and also visit Riga before or after that, but this depends on the situation. In November, we were in Tallinn, and I took the chance to take another 2 days in Riga. That's where I also met Christine and some other people. Yeah, if possible, I always try to visit several countries in one travel. It's easier. But at the moment, you never exactly know what the restrictions are. And then if you're capped in one country and then you're not allowed to go on for 1 week or two, that would be a disaster.
Yes, that's the thing.
Yeah, but for sure I will come to Latvia and especially to Riga this year again. Also, we are in talks to several projects in Latvia. So maybe in summer I'll be there even for a longer time.
We have some exciting events during the year, so
I know.
you know better than me, probably.
Okay, Frank, if you have some time, I did think of another cool question for you.
Yes, we have about 5 more minutes. I do have.
Okay, I was wondering, so is there some kind of like a golden ratio of how much time successful investor should spend on, educating himself? How much should she spend on advising their startups, or building their network? Maybe there is some kind of rate that is like, this makes sense, or this is like totally off, like you need private life also.
I don't have a golden, unfortunately, I don't have a golden rule for this. This depends a lot on each person. This also depends on the startup you're working with. I had startups that needed help very intense. At the moment, I have one that is the perfect one. Hopefully next unicorn looks like. These founders are, we do all 4 weeks a mentoring session, a very short one. And I'm always surprised how much they take and how much they do within the 4 weeks to the next meeting. And I'm with them now for 3 years. I think I had 2 or 3 times where they called me in between, where they really needed help for something. Everything else they solved by themselves. So totally easy. And I had others that were like weekly taking the phone and needed some advice or help with something. So this really depends on the situation. And with learning for yourself, this also depends on each individual. I mean, how much do you like learning? We all should learn lifelong. For one person, it's easier to learn. For some people, it's sometimes maybe to find the right way to learn. I often experience that people don't know that they never were clear of how they learn. We have different ways we can learn. So you need to find that way that fits to your person. Some people never really discover that. So they think they have to take like a webinar or they have to read a book, and then they do it and they don't get much out of it. And sometimes the reason is it was for them the wrong medium. They just need another way to learn it. So find out what is the best way to learn something. Learning should always be fun. So find that way and then spend all the extra time you have to do it. There is, for me, there is not that golden rule to say, spend an hour on learning. It's also what exactly is learning. I sometimes even learn if I do something like this. If you have some experienced audience, you can also learn something if you lecture a course. So, yeah.
Well,
Yeah.
thank you. Thank you for your speech. Thank you for your presentation and very honest answers. I'm glad you agreed upon this endeavor. Hope to see you soon in Latvia or in maybe surprise trip to Germany.
Yep.
Yep.
Yeah, for sure. We will meet in Latvia again. I'll definitely come back.
You are from which city in Germany?
Kaiserslautern.
Oh, okay.